Okay, so let's dive straight in today. We're looking at something really quite fascinating. It's about how the whole relationship between companies and their shareholders is changing and, well, pretty
That's
fast.
right. It feels like not too long ago, those annual general meetings, the AGMs,
Yeah.
they often felt like just a formality.
A bit of a rubber stamp exercise, yeah. Things just got approved.
Exactly. But there's this recent analysis. It's from the Korea Corporate Governance Service, KCGS, and they looked at a lot of data,
How much are we talking?
over 2,100 agenda items from 315 listed companies in South Korea just in the first quarter of 2025 AGMs.
Wow, okay. That's substantial.
It is. And the main takeaway, it really looks like that rubber stamp era, as you called it, might be ending.
Right, so shareholders are stepping up, getting more involved, actually having real influence now. So in this deep dive, we're going to unpack what's behind this. We'll look at, why shareholders are opposing things more, what new kinds of proposals they're putting forward, beyond just the usual suspects, and how things like executive pay are coming under the microscope.
Yeah, it's a much more active landscape.
So if you want to get a handle on these shifting power dynamics in the corporate world, this gives you a really good look under the hood.
And it's important to see this isn't just a few noisy investors. The numbers show a broader shift, like the overall opposition rate.
Right.
Where shareholders voted against company proposals,
Yeah.
it climbed to 14.9% in Q1 2025.
Mm-hmm.
Now, okay, that's up from 13.7% the year before.
Which might not sound huge on its own.
Right, but each percentage point there represents, a growing readiness to actually question things, to
Yeah.
challenge the status quo. It's more than just a number.
Okay, so it's not just more opposition, but it's the type of opposition and the ideas shareholders themselves are bringing forward that's really shifted. Feels like it used to be all about dividends, dividends, dividends.
That's a key point. It really did used to be heavily focused on dividends.
Hmm.
But now, we're seeing a much wider range of concerns. A really interesting one is the push for cumulative voting.
Cumulative voting, right? Explain that quickly.
Sure. It's basically a way for shareholders to pool all their votes together and focus them on, say, just one or two director candidates instead of spreading them out. It makes it easier for minority shareholders, people who don't own huge blocks of stock, to actually get someone elected to the board.
Ah, okay. So giving smaller investors more of a voice in director elections.
Exactly. And the numbers were significant. There were 51 proposals specifically for electing directors this way.
51. Wow.
And another 5 proposals aimed at changing the company's actual rules, the articles of incorporation, to even allow cumulative voting in the first place.
So a real concerted push there. Shareholders wanting a more direct say in who's steering the ship.
Definitely points that way. But it wasn't just about board seats either.
What else is coming up?
Well, proposals urging companies to sell off non-core assets, for instance.
To streamline things, focus the business.
That seems to be the idea, yeah. Improve efficiency, focus on what they do best. We also saw more demands for companies to actually publish their plans for, enhancing corporate value down the road.
So more transparency about future strategy. Accountability for growth.
Precisely. Shareholders want to see the plan, not just hope there is one.
And you mentioned executive compensation earlier. That's getting more attention too.
Oh, absolutely. Much tougher scrutiny, which, makes sense.
Yeah, if you're more invested literally in the company's long-term health.
You want to know the people at the top are being paid fairly and that their pay is actually linked to how well the company does, not just, guaranteed big checks.
So demanding more clarity on how those pay packages are put together.
Exactly. And digging into the financial side, even the dividend issue has become more nuanced. It's not just about demanding bigger payouts anymore.
What's the shift there?
It's more about whether the dividends being paid are, fair, considering the company's profits and its future prospects. Opposition to dividend plans because shareholders felt they were too low actually jumped quite a bit.
Really? By how much?
It went up to 10.6% in Q1 2025. That's quite a leap from 6.6% the year before for the same reason.
Okay, nearly double. That's significant. Now, there was a really interesting link the KCGS report made here, wasn't there?
Yes, this is crucial. They found that something like 94%, almost all of the companies that got hit with this under-dividend opposition, had not disclosed any real plans for how they were going to boost corporate value going forward.
Ah, so it connects back to that demand for transparency about the future.
Exactly. It's like shareholders are saying, okay, maybe the dividend isn't huge now, but if you show us a credible plan for growth, we might understand. But if you're not paying much and you're not telling us the plan, then we have a problem. It's not just about the cash today, it's about the confidence in tomorrow. Precisely. It signals a shift towards wanting sustainable, well-communicated long-term value, not just short-term gains.
And this more, let's say, sophisticated approach, it's also showing up in how shareholders look at changes to the company's basic rules, the articles of incorporation.
Yes, definitely. The opposition rate to amendments there also climbed, up to 14.1%.
And the reasons for opposing those changes are also evolving, I gather.
They are. I mean, you still have the standard concerns like worrying about changes, diluting shareholder rights, or not offering enough protection. And the issue of excluding cumulative voting is still there, too.
But new concerns are popping up.
Yeah, what's interesting is seeing opposition based on things like getting rid of written voting.
Written voting, like voting by mail or online instead of having to show up.
Sort of, yeah. The concern is that abolishing it could make it harder for some shareholders to participate, potentially weakening their overall influence. It shows a real sensitivity to any change that might reduce shareholder power.
Okay, let's pivot slightly. What about the people actually on the board or overseeing the books, directors and auditors? More scrutiny there, too.
Absolutely. Opposition to appointing outside directors went up a bit, to 13.8%. But what really stood out was a new reason becoming more prominent for opposing them.
Oh, what was that?
Concerns about independence being compromised because a director had been on the board for too long.
The long tenure issue. Worries about getting too close to management, maybe. Complacency.
Exactly that kind of thing. And it wasn't just a theoretical concern. The number of times this was cited as a reason jumped from just one case the previous year to 5 this year.
Okay, still small numbers, but a sharp increase percentage-wise. Something to watch.
Definitely. And then you have the auditors. The opposition rate for appointing auditors stayed incredibly high, 55.9%.
Wow, over half. That signals some serious disagreement or concern about who's checking the company's financial health.
It really does. And linking back to executive pay, the focus there is getting much more granular, too.
Right, you said it wasn't just the total amount anymore?
No, shareholders are really digging into the details now. Like, how specifically is pay linked to performance? Are there incentives for executives to hold on to shares long-term, aligning them with other shareholders? And, crucially, how transparent is the company about the actual formulas and methods used to calculate that pay?
So, wanting to see the working, essentially, not just the final number.
Pretty much. And the report mentioned RSUs, restricted stock units, becoming more common.
Right, as part of the pay package. How is the disclosure around those?
It seems inconsistent. Some companies are getting better at explaining the conditions when they pay out, how it works, but many others still quite opaque. And that lack of clarity definitely feeds into the overall scrutiny around executive compensation.
So if you pull back and look at the big picture, what's the KCGS's overall assessment of all this activity?
Well, they see it clearly showing a growing interest from shareholders in the AGMs themselves and in actually using their voting rights. And this engagement is driving demands for better returns, yes, but also for more say in how companies are actually run.
And it's not just the big players anymore.
That's a key point they make. It's not just the giant institutional investors. We're seeing general retail investors, individuals getting more involved. They seem to be better informed, more willing to speak up, and actively participating in these governance processes.
That feels like a really fundamental shift, doesn't it? Kind of a democratization of corporate governance, maybe, at least in South Korea.
It certainly points in that direction. But KCGS does add a note of caution.
Which is?
Well, just because shareholder activism is increasing, it doesn't mean every proposal being put forward is necessarily good for overall shareholder value. Sometimes proposals might serve narrower interests. So investors still need to be discerning, do their homework on each specific item.
Right. Don't just assume all activism is automatically beneficial. Critical thinking is still required.
Absolutely. So KCGS really frames these 2025 AGMs as more than just routine meetings. They see them as a kind of practical test of how companies are handling ESG, environmental, social, and governance issues, particularly the G.
And maybe the first real taste of this environment where shareholder rights seem to be strengthening.
Exactly. And you have ongoing talks about potential changes to the commercial code in Korea as well. So the big question moving forward is really how companies are going to navigate this. How do we manage these governance risks while also meeting these rising shareholder expectations?
It's a tricky balancing act, for sure.
No doubt about it.
So just to kind of wrap up our deep dive here, the big takeaway is that shareholders in South Korea are clearly moving beyond just passively accepting proposals and waiting for dividends.
Yeah, they're much more active, much more vocal, and they're Influence is spreading across a whole range of issues we didn't see as much focus on before.
Right. It's not just about the money anymore. It's about board structure. It's about executive pay, long-term strategy, the basic rules of the game.
It really signals a more sophisticated, more engaged investor base. They're actively trying to shape the direction of the companies they own a piece of.
Which brings us to a final thought for you, listening in. Thinking about this surge in shareholder activism and this intense focus on governance in South Korea, what do you think the biggest knock-on effects might be? For how companies are managed day to day, or for how people decide where to invest their money?
And could we see similar trends ripple out into other markets around the world?
Definitely something to chew on. A trend worth watching, for sure.